Hello and welcome to Market Domination. I'm Josh Lipton, live from our New York headquarters. There's just now to go down until the closing bell, and stocks now well off their lows here as oil is back under $100. With markets facing growing risks from the escalating war in Iran, one veteran strategist is updating his outlook, calling out greater odds of a meltdown. And here with more on his take, we've got Yardeni Research President Ed Yardeni. Dr. Ed, it is always great to see you. So stock market here, Ed, listen, we're still in the red, but we're well off our lows. Oil is back down under 100 now. Still, you did tell your clients this morning, Ed, you said spiking oil prices may precipitate a stock market correction rather than a bear market, but the latter is possible. Maybe start there, Ed. Just walk me through this. Broadly, how are you thinking about the markets right now?
Well, a correction will be down 10 to 15%. Last I looked, we were down about 3%. Maybe we got down as much as 4%. The market's actually holding up remarkably well, better than I would have thought. I was clearly reacting to what was going on overnight. Maybe I should just go to sleep earlier, but we did see the price of oil up $25 to $27 a barrel last night. And then the group of seven announced that they were going to get together and talk about maybe releasing some of the strategic petroleum reserves that they have, and that calmed the market down. I mean, the market wants to believe that this will be a very short war. It'll be over within a few weeks, and that we're not going to see much economic dislocation. I think the risks since the war started have clearly turned into a possibility of a longer war. The problem we have is that Iran is a terrorist state with a terrorist organization, the Islamic Revolutionary Guard Corps. That organization is still kind of running amok. And right now, Iran's policy seems to be just to create as much chaos as possible, to drive up the price of oil, to create fear that nothing will get through the Strait of Hormuz anytime soon. And so far, they've actually accomplished that pretty well. So I think military historians have argued for a long time that an air campaign can't win a war. And at some point, it may require us actually going in there and finding where the holdouts are that are launching these suicide drones. And so this is just not going to be over all that quickly.
Let me ask you, Ed, what does the oil price need to be for it to have material economic impact? Like, just as an economist, Ed, what do you want? Like, is it 100? Is it 120? And then, it has to hold there for a certain number of days or weeks, Ed?
Well, yeah, the problem is you can't really go back in time and look at some of the previous energy crises and come up to this is not different. It's happened before, and it did happen before. We had two oil shocks in the 1970s, but and they did cause recessions. They did cause inflation to go up, and we came up with a new term called stagflation to explain what was going on. But that's not quite what's going on right now, because the United States is much less dependent on foreign oil. We are, in fact, an exporter of oil and gas. Nevertheless, the price does matter. I don't think we're going to get shortages and gasoline lines the way we did in the 1970s, but $100 oil with gasoline maybe getting to $4 a gallon, maybe $4.50 a gallon. I think that could weigh on lower income consumers, and then kind of a jittery stock market might also reduce the confidence of households that have been doing very well in the stock market. That's what the risks are. Look, my base case is that the economy will once again demonstrate its resilience, so we'll get through this. And I do think that's the most likely scenario. But things have changed since the war started, and I had to reflect that into the risk assessment. So instead of 20% risk of a recession and things going wrong, I've raised that up to 35%.
What's the indicator, or maybe there's a group of indicators, Ed, that you watch that would suggest to you, okay, you know what, I think the worst is over? Like, is it oil prices, Ed, or are you watching, shipping through the Strait of Hormuz, or maybe some inflation data?
It's pretty straightforward. I want to see some tankers getting through the strait without any incident. Maybe they're all waiting for the U.S. Navy to get its act together and be ready to do that. But the problem is the Iranians are using these suicide drones, and they got a lot of them, and they're pretty hard to knock all of them out of the sky. And apparently they uh, still have quite a stockpile of these things. So I'd like to see that for all practical purposes, we're not the Iranians are not have run out of suicide drones, or they recognize that they've kind of lost the war.
What does the Fed make of all this, Ed?
I think the Fed's stuck between a kind of glibly call it Iran and a hard place. They're stuck. The increase in the price of oil increases the odds that the next few months we're going to have a higher inflation. The longer the war lasts, the more that inflation will spread through the rest of the economy. And they have to be concerned about that. At the same time, the labor market looks relatively vulnerable and could see higher unemployment as a result of this oil shock. And all these are possibilities. We don't know for sure. It depends on how long the war lasts and how high the price of gasoline gets and stays there. So I think the Fed for the next few meetings is going to have to just stay on hold while they sort it all out. I don't think they want to monetize the increase in the price of oil the way they did in the 1970s. And it wasn't until the late 70s that the Fed came in under a Volcker and just smashed the economy down in order to bring inflation down. We don't want to go there.
What does this all mean, Ed? I think investors are trying to figure out for corporate profits in 2026. You have a view there, or no? Maybe it's just too soon to say.
It's too soon to say, but I'm sticking with $310 a share this year and $350 a share next year. I'm still an optimist at heart. I'm still of the opinion that this will last a few more weeks. But we just have the uncertainty of exactly how long it will, in fact, last. The problem is Iran is basically a terrorist state, as I mentioned, and they are professional terrorists. That's what the government has been doing to the region and even to the rest of the world. And so they just are fundamentalists. They aren't going to give up that easily.
Final question, beyond geopolitical conflict, another concern has been private credit. And I'm just curious, how concerned are you about that, Ed? Specifically the exposure these private credit funds may have to software names facing AI disruption.
Well, these things are all related, obviously, because the private credit depends on the economy. If the economy stalls out here because of the oil price hike, then suddenly these concerns about private credit will materialize and be a real issue. Right now, my view is it's not like 2008 all over again. Back then, the bad loans were basically mortgages. A lot of them affected the banks. The banks' capital positions were impaired, and they had to cut back lending, causing a credit crunch. I don't see that the private credit issue at this point is creating an economy-wide credit crunch. But when a few loans blow up in a private credit portfolio, that's just a decline in the rate of return for some investor that isn't getting as much as they thought they were going to get. But on the other hand, we don't want to see these situations where investors in private credit desperately try to pull out of their investments and create a credit crunch that way.
All right, Ed, noted economist, strategist, and movie reviewer, we should add. I always read the movie reviews too, Ed. I always do. The wife will ask me, who recommended this one? I say, I'll tell you, Ed Yardeni. That's who recommended it.
Great. I hope I'm not steering you wrong.
Never have. You never have, Ed.
Okay.
Thank you, sir.
Thank you.
Appreciate it.
Sure.
Coming up, we talk President Trump's options to address rising oil prices next on Market Domination. Congress is limiting President Trump's options to use government reserves to fight rising oil prices. For more, bringing in now Yahoo Finance Washington correspondent Ben Worsko. Ben.
Yeah, Josh. So President Trump came into office, and even in his inaugural address, he talked about increasing America's energy backstop, the so-called Strategic Petroleum Reserve. He said we're going to fill up our strategic reserves again right to the top. And Congress initially made moves to try to do that. This was in the negotiations last year around Trump's One Big Beautiful Bill. The initial version of the bill actually had $1.3 billion set aside for repurchasing this oil, which was drawn down to historic lows during the Biden years. The problem here is that the negotiations went back and forth on the bill, and that $1.3 billion figure was cut down to under $200 million as the overall price tag of this of the bill became an issue. Where it leaves President Trump right now is with less options in terms of this strategic petroleum reserve to counteract these rising prices you've been talking about all day here. There's currently about 400 million barrels in the reserve. There was 600 million early in the Biden years. So that's a pretty remarkable difference here. It comes, though, as Trump and his team are downplaying the chances of needing to tap this reserve. Trump's message is that we have a lot of oil and other sources. He's actually talking still about increasing the reserves, even as the pace has been slow there. The bottom line here is that this is a really expensive proposition to fill this reserve, even when the oil was cheap. And now that's kind of off the table as we've seen prices go so high. And it comes as sort of one of President's options here that are frankly pretty limited to try to counteract oil prices. We're seeing some new reporting from Reuters that he's talking about decreasing oil exports to try to control oil prices within the U.S. The Strategic Petroleum Reserve aspect is another aspect, as well as some of the actions he's already taking. But the bottom line here is that with 20 million barrels of oil, they previously were passing through the Strait of Hormuz. There's very limited options he has at the moment.
Ben, before I let you go, just switching gears, this other headline, Ben, of G7 economy ministers convening today. What did we learn there?
Yeah, so this was a call that was convened by France among the G7 economic ministers on releasing strategic reserves worldwide. This would be the U.S. SPR, but also these other countries' SPRs, which would be a major change. This has happened a bunch of times in history. It happened twice during the war in Ukraine as well. So it's happening, and this could change oil prices as well. The message from the group after this call, which happened this morning, is they're watching it closely, but no action yet. The line from the joint statement is, quote, "We stand ready to take necessary measures, including to support global supply of energy, such as stockpile release." And so, in other words, we're watching it, we're monitoring the situation, but we're not ordering any release yet. The French finance minister, I think, put it bluntly, he said, the group just isn't there yet on this. This comes as this back and forth with the U.S. on their SPR and how much power they could have. These reserves have been drawn down over the years, especially with the recent Ukraine. So how much power they'd have remains to be seen, but they're clearly going to be watching it much closely and sort of looking at these coordinated releases. The factor they seem to be watching is global private supplies of oil, not just the price. And so once those get into the red in a serious way, these kind of government reserves could jump in, but it's going to be a kind of day-to-day basis as they watch how things happen in the next few days.
All right, Ben, thank you. Appreciate it.
Sure.
Well, for more on the outlook for energy markets, we have Neil Dingman, Truist Securities Managing Director of Energy. Neil, great to see you as always. So oil surges, I think it was like a 119, Neil, on WTI, but then we pair that hard. I'm just looking here, WTI now back to 95, Neil. I'm not, listen, it's 95. I'm not suggesting it's all clear, but that is a wild move. I mean, just lots of headlines and news flow, Neil. What do you make of that? What is going on here, in your opinion?
I think when you had the G7, you had some potential solutions that you've been talking about a lot of them this morning on your program about the G7 potentially doing something about tapping the SPR, about easing Russian restrictions. But again, what we've been watching, really what hasn't moved as much, is not only do we watch the spot market, but we watch what the 6-month and 12-month is doing. And if you notice, Josh, the 6-month, again, even today is now finally, I'm talking about the 6-month oil strip, where you mentioned the spot is at 95. I'm looking now at the 6-month at 76. And I've been watching that. It just doesn't have as sharp of moves, but it tells me now that it's at $76. For a long time, it wasn't moving at all, but it now over 70, it tells me that some investors now believe that this conflict is probably going to last now several months, whereas just a few weeks ago, or a week or so ago, we thought it was not going to last much longer.
Neil, I've heard some folks argue that oil at these levels, in their opinion, it's actually complacent. It's underappreciating the risk. And I'm curious what you make of that.
Yeah, I think that's the case. At these levels, I think, again, you have so much tightness. I would argue that there's not much spare capacity, whether that's, again, coming from Saudi, Russia, really just OPEC plus. And so the problem was we already got into this and we had very tight capacity to start. So to your point, I mean, when we didn't have much cushion. So this really, to me, was just could send things even going, and that's what we've been seeing.
What do you think, Neil? I'm just curious. This could all mean for consumers, for prices at the pump. Like, I mean, is $4? Do you think that's just is that a done deal here?
It feels like near term that it is. I mean, again, I think much like spot market versus a 6 month, 6 month strip that I look at, it does feel like it's going to get there, and that's probably to me what it takes to really get the administration to try to do something to ease these very quickly. Again, the hard part is when I look at my group, the upstream group, there's not much they can do to make production and generate supply very quickly. Remember, you drill a well today, it's going to take at least, best case, 6 months, 7 months to see that production, to see that cash flow. So to me, in my group, there's no quick solutions.
Neil, Trump's plan here to provide Navy escorts through the Strait of Hormuz, curious what you make of that, which did initially, Neil, seem to provide some measure of comfort to the market.
It did, I think, provide the comfort. But again, much like I think that's why I keep watching oil prices. I watch spot, I watch the 6 month, the 12 month. Initially, I think you got that move, and then all of a sudden you started seeing the longer term prices start to move up, which tells me that people thought, all right, there's going to be a little bit of solution, but that's ultimately not going to be a longer term solution for this. And thus, that's why we see, I think, back end prices start to move up where they didn't move at all a few days ago.
What about, Neil, the China factor? Because we seem to have delivered this kind of 1-2 punch to China, right? You disrupted Venezuela, now Iranian oil as well. How are you thinking through that?
It's huge. You bring up a great point. I mean, they receive more than 50% of exports, both from Venezuela and from Iran. So again, I assume this is going to be a huge bargaining chip when Trump has his meeting with the Chinese president. I believe it's March 31st is when they start, somewhere around there. Again, I think that's going to be a huge topic to come up because, again, now to your point, he controls so much. Again, that's going to be a huge bargaining chip, I believe he has.
Well, that's China. What could it mean in terms of domino effects, Neil, do you think, for Putin and Russia?
Again, they do have most spare capacity. The problem with that, it's a great question, but what we've seen historically is even when you put restrictions, even you put different things on Russia, it seems like good times, bad times, Russia keeps flowing over 10 million barrels a day. So, I wish I could say, I think there'd be a bigger solution that Russia's going to come to our aid, either add 2 million barrels or take it away if we demand. But again, I think that Russia's going to actually stay in a pretty tight range, probably roughly around, call it 9.5 to 10.5 million barrels a day.
Neil, what about our SPR, Strategic Petroleum Reserve? Per Axios, Senator Chuck Schumer now calling on Trump, release oil from that national stockpile, counter rising gas prices. What do you make of that headline, that dynamic?
It is there. Again, you have to watch. There's only a, much like the gas inventory, there's only a finite amount. You can't tap the whole thing, obviously. But to me, I think it would just, the signal that it would demonstrate is that we're willing to do that. So again, it's been very interesting because, again, through even the weekend, Secretary of Defense, Secretary of Energy, everybody has been very adamant that they're not going to turn to that. And I think that's likely going to have to change because, again, if not, I think you're going to continue to see prices start to rise. And I think that's going to be a necessity that in some form or fashion, or say they're at least willing to tap that. I think that's got to come.
Final question, commodity spikes like this, they're bad news for consumers, but they can be good news, tailwinds for others, including some energy names. What are the kinds of energy names, Neil, that you think, okay, these are best positioned to benefit if prices were to stay elevated?
We looked at which ones, again, if you start seeing a $15 move in oil prices, And the ones to me that jump the quickest are these companies in North Dakota called the Bakken. You look at a company like Cord Energy, even though they're not that big, they have over 1 million acres up there in North Dakota. You have a company like Northern Energy and Oil. Again, what's key about both of them, they're in areas that at sub $60, it can get a little challenged in there, but above $75, they are minting money. We also like, some of the big Permian guys, Diamondback, Devon would be two of our favorites as well.
Neil, as always, so great to have you on the show. Thank you.
Great to see you. Thanks so much.
Well, as the conflict in the Middle East continues into its second week, cyber risks become front of mind for investors. Yahoo Finance executive editor Brian Sozzi spoke to Evan Coleman, the founder and CEO of Cloudburst Technologies, about cybersecurity risks amid the Iran war.
I've spent the past week talking to a lot of oil analysts, oil strategists, CEOs of large public companies. I would imagine you have a different perspective on the war, the U.S. war versus Iran. What have you been seeing the past few days? Look through the prism of your experience.
Sure. One of the things we're seeing is a lot of cyber activity. There are a lot of different pro-Iranian or Iranian state actor affiliated groups that are carrying out attacks right now, targeting everything from security cameras to defense tech companies, you name it. They are looking primarily at targets, Israel, the United States, Arabian Gulf region. But these guys are quite sophisticated. I think when we think about Iran, a lot of people think, well, these guys are jokers or they're not that capable or whatnot. We should be careful here. Iranian state actors and pro-Iranian actors, these cyber actors, they are quite capable, and they are claiming some very significant attacks. They claim to have taken down half of the Kuwaiti government infrastructure last week. So, yeah, I mean, this is a significant issue. And what's interesting also is that these Iranian or pro-Iranian actors, there's a realization taking place right now. Initially, they were targeting mostly state or military targets. Now they're realizing they're going to have more of an impact if they go after soft targets, economic targets, companies, again, economic assets of the United States and Israel, as well as the Arabian Gulf region.
And Evan, I'm really, your posts on X are so helpful. It really is. It's around the clock work by you, and my hat's off to you because I know this is a tricky situation. What do you think is next? You mentioned soft targets, economic targets. What's your sense of where they may end up next and why?
Yeah, I mean, that's the problem is that if you look right now, the conversations taking place among both Iranian state actors as well as pro-Iranian actors, there is a very clear trend taking place, which is they're saying we have to shift to economic targets because that is what's going to influence the Trump administration. Their take on it, their opinion, their analysis is that no matter how many times they hit military targets, it's not going to move the Trump administration. But they feel that the president is uniquely sympathetic and he's driven by economic interests. So if they can drive the price of oil up enough or they can cause enough economic damage, that will force him to end the war. So yeah, they're looking at Western companies, particularly companies like Halliburton, KBR. They're targeting them with drone strikes right now in places like Iraq and Saudi Arabia. And we're looking at the same thing on the cyber battlefield. We're looking at attempts to target these types of companies that have significant interests in this part of the region in order to make the pain real, not just for the administration, but for everyone in the United States.
How has Iran developed these technical capabilities? Because to your point earlier, I think a lot of folks would think they are, what, you said jokers?
Yeah, no, look, I mean, there's been a shift that's taken place over the last 10 years. A lot of the sophisticated cyber activity that we saw, it used to be, again, U.S. state actors, maybe Russian state actors. There's been a democratization in the kind of skill set that is required here. And what we're seeing now is we're seeing folks, both Iranian state actors as well as sort of pro-Iranian actors that are quite sophisticated, that are quite technically capable. We are no longer living in a world where it is dominated by US hackers or Russian hackers. There are very capable hackers out there all over the place that work for all sorts of different organizations, even terrorist organizations, even like ISIS, right? So we have to sort of get away from that sense. At this point, that skill set, everyone's learned that. These skills, they're not secret anymore. You can teach yourself on the internet. And as a result, some of these folks are very sophisticated. They are capable of going head to head with even some of the top folks in the US government.
Oil prices have ripped higher during this situation. We're seeing another very robust move today in oil prices. Evan, are you seeing indications that the next, you mentioned Halliburton, the next series of attacks maybe have an outsized focus on oil assets?
It's already begun. It's already begun. We've already seen attacks on oil fields in Saudi Arabia. We've seen attacks on KBR and Halliburton in Kuwait. It has already begun. Again, these are the targets that they perceive are going to have the most impact on their adversaries, on the United States and Israel. This is what's going to cause them the most pain, right? Us the most pain. And as a result, they are shifting towards these targets. It's very clear. It's not just that they're running out of military targets. It's that they perceive this is what's going to have the requisite impact that they're looking for.
If I am the CEO of a large U.S. company, what should I be doing right now?
Well, first of all, you're going to be wanting to sync with your CISO, Chief Information Security Officer. You're going to want to make sure that these folks are looking at what are the current cyber vulnerabilities that are out there, what are the ones that are being discussed online, among hacking, among cybersecurity groups. You're going to want to understand what groups are out there that are active doing these attacks, group like Handala Hack Team, Fatamayun Cyber Team. You should know what these groups are and what they're doing so you understand whether or not you're in their crosshairs. Some of these groups are actually advertising their targets ahead of time, right? So part of this is just awareness, right? If you look at some of the companies out there that have been caught by this, Sam Bankman-Fried, his big mistake was obviously stealing from the company, but he also didn't invest a single dollar in cybersecurity. Even if he hadn't stolen any money, that company would have tanked because he didn't invest in any cybersecurity. If you run a major company at this point, if you have assets in this region, if you think you might be a target, it is absolutely your responsibility to make sure that the folks on your team are checking for these threats and are evaluating these threats, because these are existential threats. Some of these hacks can shut down these companies.
Evan, lastly, is there risk to the average viewer, the person at home with their laptop? Are we there yet?
No, but it's possible that some of these folks might see disruptions to financial services. They might see certain banks get attacked and have financial services be disrupted for a short period of time. I think that's the kind of disruption you can expect, which is attacks on U.S. companies that could slow or interrupt services online.
Is the banking sector really at risk?
Look, the banking sector is a huge target, unfortunately. It's a target for everyone. It's a target for Russian hackers. It's a target for Iranian hackers. It's a target for, people that are looking just to steal money, right? Targets of opportunity. But the reality is that if you look at the Iranian hackers and pro-Iranian hackers out there, they recognize that most sensitive targets for them are going to be the oil industry, the defense industry, and the financial industry. Those are the targets that they are focusing on, and those are the targets they will go after.
Real helpful insight here. Evan, thanks so much. Have a good week. We'll talk to you soon.
Thank you very much.
Coming up, we cover some of the top trending stories of the day. Don't go anywhere. Time now for some trending stories. Yahoo Finance's Brooke DePalma joining me here, and we're going to first take a look at the owner of Ticketmaster. Live Nation reaching a settlement with the Department of Justice. So this one, it looks like a settlement with federal antitrust authorities. Brooke, Ticketmaster can no longer require big theaters and arenas to use it as the exclusive ticketing company. Live Nation is going to create a standalone tickets technology system that competitors can use. What do you make of this one?
Well, I think today we're seeing this nice pop up about 5.5% as we make our way towards the close. But what I'm concerned about, what I question is, like, will this actually be the end of consumers enraged about these higher prices on Ticketmaster? I just don't think that this is going to be the end all that we hear of this trial, or this case rather. I think that this has been years of consumers being extremely frustrated with the prices that they pay to go to concerts. And I just don't see this as a long-term solution for fully solving this problem.
All right, we'll wait and see. On the weight loss front, meanwhile, a big win for Hims and Hers as it strikes a deal with Novo Nordisk. So this one I was reading, Novo Nordisk said to have ended its public fight with the company, agreement to sell its weight loss drugs on the Hims platform. What do we know here?
Josh, this was a 49% record single-day gain for Him and Hers. This was sort of like the elephant in the room. This company really needed to address this. About a month ago, we heard from the FDA that they essentially were banning those compounded drugs of GLP-1s, and that essentially made Him and Hers unable to provide some of its former solutions. And now we know that Novo Nordisk has said that it agreed to distribute its products through this Hims platform. Essentially, this is ending a long-standing feud between the two companies. And now those Ozempic and those Wegovy injectables will be available on the Hims platform. So this is a big win for the company that has a really rough start to the year.
And finally, Uber expanding its women preferences feature, taking it nationwide now. So this one, so expanding this feature matches, I guess, female riders and drivers nationwide. The women drivers option lets you reserve a ride in advance, or I guess set a preference, Brooke, in the app, and it kind of increases the likelihood of being matched with a woman, right?
Yeah, so Uber had this as a pilot in about 5 cities in late August, and then it was expanded to 60 cities. And Lyft actually launched this back in 2023. And frankly, I actually have this setting in my app. So basically I go to a portion of the Lyft app and I plug in, if possible, preferred female drivers. Looking back, did I always get a female driver? I don't think so, but hey, it's a nice to have sort of option here. Typically a female does typically feel safer with another female. And so definitely it's interesting to see Uber jumping on this bandwagon as well.
All right, thank you, Brooke. Appreciate it. Coming up, Microsoft and Anthropic teaming up. We bring you the details. That's coming up next. Microsoft is teaming up with Anthropic to integrate Claude Cowork into its 365 Copilot platform. The partnership aims to improve task efficiency across Microsoft software, such as building Excel spreadsheets and scheduling meetings using AI. Dan Howley spoke to Microsoft's president of business apps and agents about this and what this means for the tech giant's AI strategy. Take a listen.
What we've done there is we've really taken Copilot from being primarily a chat-based experience, asking questions, generating emails, all about actions. So sending emails, generating documents, updating your schedule and your calendar. And we did that in close partnership with Anthropic.
And so how does this kind of work? We've seen how Cowork and Anthropic can kind of do things for you on its own, the automated tasks. How does that work then with Microsoft 365? What kind of tasks can you expect it to kind of complete for you?
Yeah, a big thing about Copilot Cowork is that it integrates with all the M365 applications and all of the data that you have stored inside of Office apps. So we call that Work IQ. So it's really seamlessly integrated with all of those Office applications and workflows we know and love. Plus, it's hosted in the cloud, so you don't have to run it locally on your device. You can just run it, close your laptop screen, walk somewhere else, and it'll keep churning away to complete the task for you.
And so I guess, if I'm getting a bunch of emails or I have to set up a meeting with someone, I need a presentation. I'd seen a demo of this that you guys had put out. It's basically, I just tell Copilot Cowork, hey, put this presentation together, get these people together for a meeting later this afternoon, and it'll just go ahead and do that for me while I can go grab a coffee or something.
That's exactly right. And I think if you can think of it, and you could probably dispatch it to another person, you probably can give it to Cowork. And the thing that we've really seen as people have used it the last couple of weeks is you can dispatch a lot of these things at the same time. So it's not like generate one presentation or generate one spreadsheet or schedule one meeting. It's more like one after another, and you let 5, 6, 7 of these things run around in the background.
What are you seeing as far as uptake from enterprises when it comes to these different AI offerings? Microsoft has Copilot, built into 365. It allows you to work throughout the different suites, the suite itself, whether that's with Word or Outlook. What's the uptake been though for enterprise users?
Yeah, I think we've been super impressed. Just in the last year, we've seen a 10x increase in the daily active users for M365 Copilot. 90% of the Fortune 500 are using M365 Copilot. So I think we're in a very rapid adoption phase and diffusion of these tools at work.
And I think a lot of people, when they think Microsoft and AI, they think OpenAI. You guys have that big deal together. You've been working side, hand in hand for some time now. Now we're talking Anthropic. I guess what does that mean for Microsoft? Does it mean a pivot to more models? What does that look like?
Yeah, our big focus is we're going to be multi-model, and we're going to use the right AI model for the job. So for example, inside of M365 Copilot, we have an auto router. It'll choose, in some cases it may use an OpenAI model, other cases it may use an Anthropic model. And the real magic comes when you take those models and you join it together with your Office data, that Work IQ that we have.
And is that, I guess, when you go in yourself, it does that auto routing. Can you select whether you want OpenAI or if you want Anthropic's models when you're just, kind of navigating on your own?
Yeah, and end users can go pick. We have like a drop down. You can go choose, of course, but we try to keep auto because the best model for the job may change on a day-to-day basis or a month-to-month basis. Like the best way to chat or the best way to create a spreadsheet, maybe one model in March and maybe a different model in April.
When it comes to these kinds of developments and apps, everything obviously it's going incredibly fast. I think that's the one thing everyone can agree on when it comes to AI is that it continues to evolve quite rapidly. Where do you see this going now for Microsoft when it comes to these kinds of agents, when it comes to these capabilities and the productivity side of things?
Yeah, we think that agents are going to show up everywhere you work, because another big part of the announcements today is we have agentic capabilities inside Excel, inside Word, inside PowerPoint. So you can ask questions, but it can also start updating formulas or changing your tables, create a pivot table for you, or update your Word document. So we think this idea of what you see with Copilot Cowork is going to show up in lots of different places, dedicated and embedded, and it's what people are going to start to expect from AI tools, just like you expect chat to work.
So it's going to be essentially, when you think Microsoft 365, you think, for people like me, Office, who grew up with Office. You think about that suite of tools. Eventually, do you just say, okay, well, AI is a part of it, right? Like, just as Word or Excel is a part of it, AI is now a part of it, and that's, it's part and parcel for it. Is that how it kind of goes eventually?
That's exactly right. I mean, like you have Word, you have Excel, you have PowerPoint, you have Copilot. Like that's what modern office and information work is going to look like.
Dan Howley with me now to unpack this great interview. Dan, here's a question. So maybe start simple. I'm a viewer. I just listened to this very good interview.
Great interview.
Great interview.
So we're saying the best.
Maybe I'm an office worker. What does this tool do for me? Like, how does it make my life easier?
It's supposed to be basically automate a lot of the tasks that you would do throughout the day that maybe you don't necessarily have time for or are just a pain, right? So basically the way that they'd explained it in one of their releases was that you would be able to say, tell it that you need to prepare a presentation for, a meeting and then send out emails inviting folks in your team to that meeting. And it would then go off and do that. And it's not as though it just does one thing, it can do multiple things at the same time. So, you can tell it, go do this, and then you know what, go do that too, and then this. Now, of course, a lot of this is stuff that Anthropic has announced with Claude before and co-work. And I think part of this feeds into that or reduces that narrative that software was done for it, that it was basically going the way to dinosaurs, that and it enhances that idea that instead AI is just going to be kind of an additive to them, right? We've talked about that, how we saw the software stocks take huge hits when Anthropic announced co-work. What was it, in January? And then they announced the plugins for it, and that just sent people into a tizzy. And ServiceNow got crushed, Salesforce got crushed, Intuit, Thomson Reuters. But since then, I think people have come to realize, it's just going to go into this stuff, and they'll sign deals with other companies. And yeah, they may have their own offerings down the road, but it makes more sense for it to work in something like Microsoft 365, which, look, I don't know why Microsoft, this is just a tangent, I don't know why Microsoft decided to change the name from Office. You had the name, that was it. Everybody knew Office. It doesn't need to be Microsoft 365. Just call it Office, guys, it's fine. Everybody's using it in the office. Anyway, and so that's the general idea, that you'll just throw that into there, and you'll have Microsoft 365/Office doing all of this work and have AI along the way. And to me, that made sense from the get-go, not that Anthropic would come in and say, all right, not only are we working on these AI models, but we're also just going to build from scratch this productivity suite, and a customer relationship management system and things like that. So this seems to be the way that the industry is more likely to go.
Why did Microsoft feel the need to team up with Anthropic? They couldn't use their own AI models.
Yeah, so they have their own AI, but I think they see that Anthropic is more advanced. It's one of the most advanced labs out there. And then, they have that huge deal with OpenAI, which has kind of been like, they're like neighbors, but like it feels like the neighbor that you let borrow your lawnmower and then you get it back and you're like, he scuffed it over here. Man, I hate that guy. It's like they're not exactly best friends anymore it feels by any stretch of the imagination. Now they'll probably tell you, no, we love working together, but it's it seems to have become acrimonious as time's gone on. But they still have access to OpenAI's capabilities. OpenAI is kind of spreading its wings a little more, and so Microsoft is basically hedging and saying, look, we can't just rely on this one company. We should be offering these different models to customers, and as Charles was saying, allow them to kind of automatically go between OpenAI or Anthropic or what have you, whenever the application sees which one is better for that particular task. And so it is interesting that they have Anthropic, just because it's obviously they don't like each other, OpenAI and Anthropic, and Microsoft and OpenAI have had this kind of weird relationship now, and they're now working with Anthropic big time. So it's fun to watch this kind of little soap opera among these massive companies.
Final question, kind of bigger question. I mean, investors have this concern. Some do. I mean, the stock is down like 15% here this year. All this AI spend, where the ROI is. do the Copilot stats, which you talk about in your article, Dan, so 15 million paid seats, 160% quarter-over-quarter growth, does that, in your opinion, help address that?
I think that it does to a degree, right? I mean, I think that investors are going to want to continue to see improvement over time. Obviously, that's just how investors are. The idea that this is going to help increase growth for Microsoft's cloud business, that's what all of this is about, right? And so, and it came at kind of the perfect time for their cloud business, just because we'd seen that the growth slow, right? Because you hit a critical mass, massive numbers, and so naturally you're just going to start slowing as far as growth goes. This, though, another shot in the arm, right? It's another amount of money that companies have to pay each, per user per month, and so it helps amplify that growth and kind of re-trigger that. I think what they need to show is that kind of similar trajectory that they had with cloud. Otherwise, I mean, they're spending billions and billions of dollars, right? I mean, they have commitments, but that's from OpenAI. People kind of look at that and say, well, okay, so where's everyone else on there, right? And so they're also in this three-way race with Amazon and Google to be the AI kind of, hyperscale leader, right? And so at this point, Google is back in the lead. We had been saying that OpenAI was, crushing them, and then Google came out with Gemini 3, and it's kind of been in Google's, court since then. And then you have Anthropic coming in and just saying, okay, here's our stuff, and everybody freaking out. So I don't think anybody really knows what to make of AI at this point, but they just want to see these companies continue to grow revenue.
Dan, great interview, great article. Thank you, my friend.
Always, always.
Coming up, we've got you covered all the action following the closing bell. Stocks turning positive to end the day as President Trump says the war in Iran could be over soon. Our very own Jared Blickery standing by with the latest moves. Jared.
Thank you, Josh. The magic words were spoken. We got some jaw-dropping moves in oil today, but let's start with what happened in stocks. We're going to start out with the Nasdaq Composite. Tech made a huge rebound, mainly on the back of semiconductors. This is a Nasdaq Composite. It was down 1.45% at the lows, almost 1.5%, closing up about 1.4%. So a mirror image swing right there. Here's the Dow, finishing the day up 0.5% or 239 points. It was down probably 1.5% at the lows there. S&P 500, similar story. I do want to point out, though, that my key level last week was 6,800. We broke it to the downside. Now we have rallied right back up to it. That is a natural place where the shorts could come in. Here's the year-to-date chart, and we're coming right back to that level here, 6,800, excuse me. But let's go down the line. We got a lot of markets to get to, so let's take a look at the VIX. The VIX has settled down to 25. This is a year-to-date chart. I'll give you a 5-day view, and you can see that peak overnight. We got above 30 for the first time in a long time. That has come down, so a little bit of fear evaporating from the market. Here's a 10-year T-note yield that is up, well, we're actually going to call that just about break even, just a fraction of a basis point to the upside. And let me show you what's going on with WTI crude oil, because it hit $120 close to the open last night. It's trading at 86 right now. I'm going to show you the daily range. Basically 120 at the high, nearly 80 at the low. That is a $40 swing in WTI. I have not seen that since probably 2020. And here is the large cap sector action, where energy and financials didn't do that well today. Tech was a come from behind story. Here's what the price action for the day. There's that Trump announcement in the final hour of trading right there. So tech finishing up 1.75%. Healthcare also up more than 1%. Those were the only two outperformers. Here's the Nasdaq 100. Very different picture from this morning at the open. And a couple chip stocks really powering the Nasdaq higher. Here's NVIDIA up 2.5% and Broadcom up 4.5%, but also saw a nice gain from Alphabet up about 2.7%. In the Dow, we got a little bit more red. You can see Cisco down about 3%. I do want to move on, though, but I do want to move on because the software sector, software industry is showing a lot of red. And to be fair, it hadn't been doing well this year, and it wasn't the come from behind story today. But the semiconductor stocks, you can see a lot of these just ripping into the close. ASML, Applied Material, Lam Research, Intel, all of those up more than 4%, some of them 6%. Throw AMD and Micron in that group as well. SanDisk up 11%, Lumentum up 14%, so really a huge showing there. Even in meme stocks, we saw kind of a risk reversal today, and I only show this to show how much green, because there was a lot of red over the last few days and even at the open this morning. So you put it all together, and we have seen a pretty big turnaround. Now here are the transports. This is another sector I got. It's kind of one of my canaries in the coal mine here, and we saw a lot of deep red in airline stocks this morning, and there's Southwest. It's up 3.5%. United up 2%. Some of the logistics companies that got smashed this morning up 2%. But still, when you look at the actual index levels, it still concerns me that we only regained a little bit of the territory. And this happens to be, for a lot of these stocks, for a lot of these industries, exactly where the shorts would be reloading. So we'll have to see what happens tomorrow, Josh.
All right. Thank you, Jared. Well, let's explore how the market started the week. Sylvia Jablonski from Defiance ETFs is with me now. She is, of course, their CEO and CIO. Sylvia, always great to see you. Let's just get your take on these markets, Sylvia, because we finish in the green here. Oil's back under 100 after nearly hitting 120. WTI, we're back at 85, Sylvia. Trump telling CBS the war is very complete, pretty much. What do you make of this, Sylvia?
Hi, and great to see you, and thank you for having me. Well, I think it's certainly been a week or so of wild swings, right? I think the swing in oil this morning, particularly seeing where it was pricing up, is what pulled the market back going into the open. And then, obviously this news that we just got a few minutes ago, if it's true, the markets are taking it as true that the war is nearly complete. is sending oil prices down and kind of stabilizing the market and getting it back on track to what it was. So it's pretty interesting. The market went into this year, I think, in a constructive place where we had the expansion of breadth. We had, investors really diversifying their exposure. And we, had a great earnings season so far. 74% of names beat on the top of bottom line. The growth rate was 14% or so. Jobs are cooling the way we wanted them to, but not too much, minus that last read, which is a little bit off kilter from what we expected, but inflation is kept at bay and corporations are doing well. So, it's really this geopolitical issue that is tipping the market either way.
Sylvia, there's a lot of investors, I'm sure, you could forgive them if they found this moment kind of overwhelming, right? All these headlines, all this news flow, you sort of just get whipsawed around. And viewers listening right now, listen, people have different cash, different time horizons, but is there broad advice you would give, Sylvia? Are there broad lessons learned? Is it, to stay disciplined, to stay diversified? What would be your guidance?
I think you just gave the best advice, right? I think it's to stay disciplined and stay diversified, but also stay the course, right? So if you go back in history and every geopolitical event is different than the other, and, especially when it's something like Iran, who knows how long it will last. But historically, these events happen. And then what happens afterwards is that the market tends to recover and even, rally from the level it was at before. And so, just knowing how the S&P has performed over the last 100 years and how it performs after these events. We had the big tariff event last year, about a month after the date we're from now. So I think don't panic sell if you don't need the cash. And if you're somebody who was trying to get into the market, there was a good pullback. It was 3 to 4%, but there are some names out there that can have hyperbolic growth, and that could be in the AI warfare space, that could be in AI power and infrastructure. And some of those names do go on sale when you have these shocks to the market. So, dollar cost averaging and buy on the dips, but stay the course and don't kind of throw away money, right? Unnecessarily. Be disciplined.
What do you think, Sylvia, the Fed is making of all this?
Yeah, the Fed is in an interesting spot here, right? Because we had a little bit of a hotter than expected number on one side when it comes to the inflation mandate and trying to get back down to that 2%. And then, you had the jobs number, and then you have the backdrop of geopolitics and Iran specifically. And so if you have surging oil prices and this sense that perhaps this won't end and will continue, I think they would be, hard pressed to get a lot of market approval or agreement with a rate hike or perhaps even not a rate cut. But, I think going into the market, if we excluded this event, we would probably have 2 cuts or so is the estimate. Given this event, I think they're in a tough spot, right? Because the market, I think, at least would want to see holding steady, if not doing a cut.
Switching gears, Sylvia, your firm offers what I think is a really interesting product, the JEDI ETF. Now, this is a drone and modern warfare ETF, and you're seeing here, huge volume spikes there. Explain a bit about that ETF, Sylvia. What are you offering investors with that product?
Sure. So this is essentially modern warfare. This is if the key word for the year in the last couple of years has been AI and how to monetize on AI and which industries will be impacted. Aerospace and defense, warfare, military is one of the key areas that will be impacted and improved through the use of AI. So, think about giving you an advantage with decision making versus just firepower, right? And so now the US and other countries, you see this happening in Ukraine, has the ability to use low-cost drones to, have more precise targets, to do better surveillance, to have communications, things like this. So the ETF gives you access to names that are involved in space satellites, in drones, in all of these modern warfare types of areas, including wireless communication, things like this. So think the Kratos, AeroVironment, Palantir, stocks like this. And, we are in this geopolitical event. And I think a lot of investors see that, this is where the spending has gone, and here it is coming to fruition. So in 2024, you had a $2.7 trillion budget, and that's expected to, grow precipitously in years to come. There's a lot of government spending, a lot of defense contracting, and it's going into these areas. And so investors, I think, are now positioning into the new guard of AI and modern warfare, and that sits well in this JEDI ETF.
Finally, I don't know if you have thoughts on this, but as you're talking, I'm just wondering, Palmer Luckey's Anduril, when they make their public debut, would Anduril be a good fit for JEDI?
It would certainly fall into that space and satellite bucket if it became a public company. I mean, there's, index rules that it has to adhere to, but yeah, when you see space satellite communications out there, it's a bucket that companies like that could probably be plugged into.
Sylvia, always so good to have you on the show. Thank you.
Thank you. Have a great day.
Coming up, we look at how the conflict in Iran is impacting farmers here in the U.S. Don't go anywhere. We've been talking a lot about the oil market and geopolitics, but there's another ripple effect investors should be watching closely, and that's fertilizer. The war in Iran is threatening a key global supply hub in the Persian Gulf just as farmers head into planting season. From where we're bringing in now, Blake Hurst, farmer and former president of the Missouri Farm Bureau. Blake, always good to see you. So let's start there, Blake, because the American Farm Bureau is saying farmers are already reporting fertilizer sales freezes, price volatility. What are you sort of experiencing yourself, Blake? What are you hearing from other farmers?
Well, we've seen the price of urea, which is an important nitrogen fertilizer, go up somewhere between 30 to 50% since the start of the conflict in Iran. So that's a real problem for farmers who are just now. Some fertilizer goes on in the fall, some goes on in the spring, and farmers who haven't applied yet are going to be at a real economic disadvantage to those who put it on last fall.
So if supplies did stay tight then, Blake, how disruptive would that be for your farm?
Well, we've applied most of our fertilizer, but what will happen is in the Midwest, the alternative that farmers have is either to plant corn or soybeans. Corn is a heavy user of nitrogen fertilizer. Also, sulfur fertilizer is getting to be a big issue because a lot of the sulfur comes through the Gulf as well. So what farmers will probably do is decrease their corn planting from what they had intended to plant and plant more soybeans, which takes less fertilizer. We were at a break-even position planting corn at best. This last hike in fertilizer prices has meant that we're looking at a loss as we plant the crop. So I think people will be making changes in what they plan on raising this year.
So that's interesting, Blake. So when there's big changes like that in fertilizer cost, your point is, okay, farmers react and respond. They change sometimes what they will plant.
Absolutely. Yeah. We'll tend to go to crops that are don't use as much fertilizer, and that's going to be it's going to be interesting. The USDA surveys farmers and comes out with a planting intentions report here in a few weeks, and it's going to be interesting to see if the early plans that farmers had have changed, and I think they probably have.
I had seen, Blake, that buyers are looking for supply from other regions, so North Africa, Southeast Asia. I mean, how realistic is that? I mean, how quickly can the industry pivot, I guess, if necessary?
Well, it's a world market, so if we see a cutoff of supply from the countries that surround the Gulf, it's obviously going to drive prices higher, make supply shorter. We're also looking at tariffs on several of the imports or the fertilizers that we import. That has kind of changed the supply chain as well. And also, a big producer of fertilizer is Russia, and there's sanctions against imports of Russian fertilizer. So there's a lot of stuff going on in what is normally a pretty boring market.
How about energy prices, Blake? I'm curious how you're navigating that. Listen, we have seen these wild swings there. WTI hit nearly, I think, 120, then paired that dramatically. I think we're back to about 85. Polymarket's been tracking that. They think about an 82% chance we're going to hit 100 for crude by the end of March. Rising energy prices, how much does that potentially sort of compound problems for farmers, Blake?
Well, sure. We're interested in the price of diesel, which is what we run in our tractors here. We've seen it spike probably 50 cents a gallon over the weekend. It's amazing how quickly it's reacted to what's happening in the Gulf. So it's time of year when our use is the heaviest, and we're looking at higher prices.
They did, Blake, it looks like the American Farm Bureau Federation, I don't know if you saw this, they did send a letter, it sounds like, to President Trump today, kind of laying out what sounds like some suggestions, some recommendations, kind of hopefully lessen the impact of this expected fertilizer shortage we're talking about. They have a number of suggestions. They talk about utilizing the U.S. Navy to provide safe transit for fertilizer shipments to the Strait of Hormuz. They talk about leveraging federal tools to address insurance or financing barriers for vessels transporting fertilizer cargo. I don't know if you saw the letter or you're just hearing those suggestions now. Any thoughts there, Blake?
Well, we've obviously got a risk problem and insurance problem. Those cargoes are afraid to go through the straits without insurance. So anything the federal government can do to help the shippers secure insurance would be very important. Hopefully that the Navy can protect them as they go through the straits. But basically, it's an insurance problem, and companies are very, very reluctant to go through there without insurance coverage. And so we'll have to get that straightened out before we see an improvement.
And finally, Blake, you are a soybean farmer. Just bringing me up to speed there, because Last year, Blake, correct me if I'm wrong, and I think you were on the show talking about this. You know, the Chinese weren't buying Blake. They were protesting the tariffs, but now we have a deal and they're going to start buying again. What is the latest there?
Well, they made a commitment to buy this year, and it was never clear whether it was marketing year. The marketing year for grains is different than the calendar year. They made a commitment to buy about 60% of what they have traditionally bought from us. They've come pretty close to fulfilling that commitment. That's very good news. And it was reflected in about $1 increase, about a 10% increase in the price of soybeans. Now, what next year will bring, I do not know. Obviously, the Supreme Court decision outlawing the tariffs has made, at least raised some doubt about whether those agreements we had with China are still in effect. And it's just a waiting game. What is concerning, though, is even after the agreement, they just agreed to buy slightly less than the average of what they bought the last 5 or 6 years. So this year, we're seeing a big drop in soybean exports to China, much less than what we saw during the first trade war. And it's reflected in our prices on the farm.
Blake, as always, it's so good to have your perspective on the show. We appreciate it.
Well, thank you. Thank you for having me.
And you can scan the QR code on your screen to go to the Yahoo Finance Prediction Markets Hub, powered by Polymarket. Well, Beta Technologies is ready for its next journey after ending a milestone year. The electric aerospace company made its public debut, remember, in 2025, topping off the year with better than expected revenue for the fourth quarter. Joining us now is Beta Technologies founder and CEO, Kyle Clark. Kyle, it's great to see you. So let's just dig into these results first, Kyle. So Q4 sales came in ahead of estimates. Your Q4 adjusted EBITDA loss, Kyle, that looks like it was larger than expected per Bloomberg at $103 million. Maybe just walk us through the report, Kyle. What are you seeing in the business?
Yeah, I mean, look, the revenue numbers that we posted last year, which was a huge year for us, it's not so much the quantum of revenue, but the constituents that made up that revenue. And it was a bunch of small developmental projects with large defense primes and large aerospace primes for component sales that are the seeds to much larger revenue in the future. And fundamentally, it's organic revenue. People are paying for the technologies that we've developed. As far as the targeted EBITDA loss last year, we were better than expected, and our revenues were higher than expected.
On an annual basis there, Kyle, so you generated, it looks to me, about $36 million in revenue last year, did post a net loss. You're investing, of course, heavily in R&D. If I'm an investor, how should I think about sort of the pathway, the timeline to profitability?
Yeah, I mean, look, in any highly regulated environment, whether it be pharmaceuticals, FCC, or the FAA, there's a big investment up front to get over that threshold of certification, and that's what we're aimed at right now. The interesting thing is we've been concurrently investing in Department of Defense work that may have a shorter time fuse than the traditional FAA-driven commercial aviation. But there was a huge change today that was announced after our earnings call, which was the eVTOL integration pilot program. Department of Transportation announced the winners of that about an hour ago now, and Beta was a huge winner across the board, getting 7 out of 8 programs, more than any other company in this space, and that advances our entire business model by about a year. So our guidance is going to change drastically based on this news that's like an hour old. So we beat the earnings last year. We have really good forecasting into this year, and it just got way better.
So in practical terms, Kyle, that news you're mentioning there, if I'm an investor, I'm trying to think through, okay, what could that mean for Kyle, the commercialization, the revenue timelines? What line of sight could you give us there?
Yeah, sure. So the initial kind of business plan was to get through certification, work with operators to get the aircraft on their operational certifications, and then enter into the service. And that started with medical, cargo, and logistics. With this new program and winning so many of these across 26 different states, we get the opportunity to concurrently launch a pre-certified aircraft for revenue-generating flights with our partners, for cargo and logistics, concurrently while they get their operational certificates. This is like an entire paradigm shift on enter into service in aerospace. So naturally, it not only pulls our revenue forward, it pulls our ramp production forward, which lowers our cost of bill of materials. And reduces the total time that we have to carry this factory, the people here, before we start producing large numbers of aircraft. So we'll be issuing new guidance based on these wins today, but unquestionably, I mean, we're going to pull some CapEx in this year as well to invest in that ramp. It doesn't change the total quantum spent on CapEx, but it compresses the time on the burn of the OpEx, thus making our business significantly more efficient and lowering the risk with the wins.
These different sort of missions that you mentioned, guys, so cargo and medical logistics, passenger transport. Is there one of those, Kyle, that you look ahead and say, you know what, I think that would likely be our biggest revenue driver?
Yeah, look, I think the market is almost unbounded when we get to vertical takeoff and landing passenger applications. It changes the way the world moves about the world. Transportation will change forever. However, near term, we're starting with medical cargo and logistics, where the big advantage is a lower cost and a more flexible asset. That will grow into passenger flights. In parallel, the military applications, where the military is looking for a low-cost, attritable, flexible asset to deliver water medicine bullets over the hill, unmanned, will change the way that we fight as well. So there's a lot of concurrent paradigm shifts, and fortunately, we're at the front end of every single one of them.
Finally, Kyle, just to circle back on something you mentioned, because Barron's brought it up too in their piece, how your defense business could be accelerating, including work on this hybrid electric cargo aircraft. How big is that opportunity for you?
Yeah, so with the, our proceeds out of our IPO more than doubled our expectations. We went out to raise $500 million. We raised 1.2. We did better than expected in the fourth quarter, and I elected to pull in our MV-250, our vertical takeoff and landing military aircraft, in by about 6 months, and the out phases of that program will come in as well. We did that specifically because there's a big acceleration in large primes looking to small, flexible, and active participants like us to serve their needs. And that was really highlighted in the January executive order called Prioritizing the Warfighter in Defense Contracting. And it exactly pointed at the primes and said, you need to look to companies like Beta Technologies and incorporate their low-cost, attritable, and flexible assets into what you're offering. And so we've been fielding those inbounds, and we accelerated that program forward. I think that demand signal is gonna shift to real orders much sooner than we had previously expected.
Yeah, I'm just looking at all 8 analysts covering you all, Kyle. All 8 say you're a buy. 0 holds, 0 sells. Not bad. Kyle, thank you as always for your time today, sir. Appreciate it.
Hey, thank you.
Coming up, the feud between Anthropic and the Pentagon escalating. We bring you the details. That's coming up next. Hello and welcome to Asking for a Trend. A lot happening in the AI world right now. Anthropic is now suing the Pentagon. It's after being labeled a national security risk. Meanwhile, Oracle and OpenAI are scrapping plans to expand a major AI data center. And OpenAI is delaying ChatGPT's so-called adult mode. To break it all down, we're calling in for tech support with Yahoo Finance's very own Dan Howley. Dan, let's start here. Headline number one. Anthropic, all right, filing a lawsuit to stop the Pentagon from putting it on this national security blacklist. The fight continues. Per Reuters, Anthropic is saying here designation is unlawful, violated its free speech and due process rights, wants the judge to undo the designation and block federal agencies from enforcing it.
Yeah, they say that this is the federal government retaliating against them for expressing their principle that they don't want their AI used for mass surveillance of Americans or to develop fully autonomous weapons. And so, this is just an escalation of what we've been seeing, for the past, couple of weeks now, right? Where the DOD and Secretary Hegseth saying, don't tell us what to do, we're going to do this, to then them having that deadline for, what was it, last Friday at 5:01 p.m. If they didn't change their tune, then they would be blacklisted. Trump coming out and saying, all right, nobody in the federal government should be using this anymore, let's take it out. And the DOD saying it's a supply chain risk. Oh, and by the way, this is reportedly being used currently in Iran with the operation that the U.S. has going on there.
Yeah, I saw that. The Journal had that.
Right, and also was used in Venezuela during that operation there. And so, it's not as though they're not a customer of Anthropic, the government. They use them already. They're one of the only AI companies, or were one of the only AI companies that could be used on secret networks. And so, it's just fascinating to see this relationship just crumble so quickly. And so they say that, they still want to talk to the DOD. They're still, working in good faith. CEO Dario Amodei did have a memo to employees leak where he basically was just saying, look, they're not, they don't like us because we didn't, we weren't slavishly praising Trump like OpenAI was. Then he came out and apologized and said, my bad, I was a little upset. This was shortly after OpenAI swooped in and said that they had to deal with DOD. So it's this ongoing fight. We just have to see where it goes now.
I wonder if Anthropic would have a tough time, though, only because, Dan, I could see if the Department of War says, we have this contract, we don't want a contract with you anymore. And if they cite national security issues, I just wonder whether a judge is going to step in and overrule that.
Well, so their argument is that it violates their free speech.
Yes.
And so that's, you have to wonder, and Anthropic seems to think they have an ironclad case here, that, this is going to get thrown out. They're not going to be considered a supply chain risk. And perhaps the government will start using them again or continue using them, right? And so, if you look at the lawsuit, it's essentially every agency in the federal government, from the Federal Reserve Board of Governors to the Department of Energy to NASA. I mean, Scott Bessent is named in there, Marco Rubio, RFK. I mean, it's just, this kind of who's who in the administration, as well as the different organizations. And so, you have to imagine at some point they'll either settle with the government or we'll get a ruling and, Anthropic wins or loses. At the same time, OpenAI is benefiting because, they're in the administration's good graces. They're not having this fight. There was some kind of, back and forth with Sam Altman and users where they had said, hey, look, what is this, right? Like, you're saying that you're sticking to principles, but the language of your agreement seems to allow the DOD to sidestep that. And so he came out and said that they're going to reconfigure the language, make sure that it's all, on the up and up, and kind of go by what Anthropic had originally wanted. So yeah, I mean, it's really difficult to see where this ends up. It's not exactly a huge loss for Anthropic from a customer standpoint.
Because they're all enterprise, dude.
Right.
Yeah.
So, but the government is a massive customer. At the same time, they still have other places to make some scratch.
Here's a second headline, get the Dan Howley take on. Oracle and OpenAI ending plans to expand this flagship data center in Texas. Now, this is per Bloomberg, citing sources. They say scrapping plans after negotiations dragged over financing and OpenAI's changing needs. Analysts at Bloomberg weighed in on this. Here's their take. They say reliance on Amazon Web Services capacity for AI training and inference may have factored into OpenAI's decision to scale back expansion plans at that Texas data center with Larry Ellison's company. But what do you think?
It's interesting. Reached out to Oracle, and they had a message or a statement on their site that said recent media activity about the Abilene site are false and incorrect. First, Crusoe and Oracle are operating in lockstep. Crusoe is the developer for the site that then the companies lease it out from. In lockstep to deliver one of the world's largest AI data centers in Abilene at record-breaking pace. 2 buildings are completely operational, and the rest of the campus is on track. Then they said, second, Oracle is completely leased it's completed leasing for the additional 4.5 gigawatts to deliver on our commitment to OpenAI. So they're pushing back on this, saying, look, we're okay, we're continuing to build out. It doesn't necessarily get to that idea of the expansion. They do just say flat and outright that it's false and incorrect. But the Bloomberg article basically says, Oracle, OpenAI backed away, and then Meta just came in with the help of NVIDIA. So they were like, baby, we need some space too, so why don't we get in there? This is all just going to continue as part of this huge build out. Oracle reports tomorrow. There's also another Bloomberg report saying that they're preparing to lay off thousands of people to help finance and get the cash that they need to pay for this massive build out. And oh, by the way, they're not the only company that's kind of getting hit for this. Oracle stock obviously is down for the year. They're down massively from their highs in September, but Microsoft not faring too well. They think they're down 15% year to date. Amazon around 7%. Google and Meta, they're doing a little bit better. They're more flat than anything. But those companies combined are expected to shell out $650 billion to build out their AI. And then you have Oracle doing its thing as well with OpenAI. And so, it's just going to be, I think, this constant pull between, okay, we want you in AI. We want you guys to push into AI. But we don't want you to spend too much before we know that it's paying off. And I think the tech companies are saying, well, we don't know how much it's going to pay off until we actually spend this. They'll tell you, in between AI is generating a lot of revenue, yada yada. But I think 650 billion, 1.4 trillion of spending on its own at OpenAI. There's still a lot up in the air.
Evercore did weigh in, by the way, just saying this news, the Bloomberg report, does add, in their words, to potential headwinds heading into the Oracle quarter. And Oracle, as you mentioned, scheduled to report tomorrow. Finally, reports saying here, we'll end here, Dan. OpenAI is delaying ChatGPT's adult mode. The feature was expected to launch sometime this quarter. Spokesperson saying here, pushing back the launch of adult mode so we can focus on work that's higher priority. What would that be? Gains in intelligence, personality improvements, personalization, making experience more proactive. I did search around, by the way. What is adult mode? I wondered, what is adult? So now I've been flagged by Yahoo HR.
Yes, yeah,
I would imagine. Red flags all over Josh Lipton.
Yep.
Yeah, I'll be called in later for that.
You're getting Wi-Fi revoked.
Apparently, this is going to allow users to create AI erotica, adult-themed conversation. What do you make of it?
It's AI porn, basically, is what, I don't know, like, who the hell was just sitting there like, you know what I could really get out of ChatGPT? You know what I used it for over the weekend? Finding out which couch is better at protecting against cat scratches, right? That's what comes to my mind. There are other people, I don't know, they got different ideas for ChatGPT. The internet, Avenue Q said the internet was made for porn. I guess that's what people think ChatGPT was made for as well. I do think that they're making the smarter decision to work on things that are going to help their business rather than this. This also felt very like sophomoric, right? Elon Musk has Grok and he talks about how it's so edgy. It's like, who are you impressing?
The weird thing, I could see that on this topic, now Altman will say, I think he frames it like, listen, I'm going to treat adults like adults. That's what I'm doing.
Yeah.
Okay. On the other hand, you could certainly say, is this potentially going to lead to some very dysfunctional, unhealthy attachments?
No, that hasn't happened at all. No.
You can see that as well. By the way, there was we'll end here on this topic. There was this very interesting journal article a few weeks ago talking about how OpenAI cut ties with one of its top safety executives. Now, on the grounds of sexual discrimination, but it was after she voiced opposition to the rollout of this kind of AI erotica, had told colleagues reportedly she opposed adult mode and was concerned it was going to potentially have some harmful effects.
Well, look, I mean, look what happened with Grok, right? The image generation stuff,
Yeah.
right? I mean, that was crazy,
Yeah.
you know? And so then you have something like this. Okay, well, you have to think about what the consequences are here,
Yeah.
you know? And it's, if you want to treat people like adults on your site, that's great. Or
Also, how do you
app.
even, can I just ask you, how would you actually verify adults?
Well, so that opens up a whole other.
That's a
can of
whole
worms,
nother thing,
right?
Yeah, it's a
Because
whole
how
nother
you
matzo
verify,
ball,
and
right?
do you want to have people be verified? Okay, then that opens the door up to surveillance, and it takes away the anonymity that the internet offers. And so, I think that
you'll get the pop-up, like, I want to look at a good bottle of bourbon. Are you 18?
Yeah.
Sure.
Oh, yeah. I mean,
Right,
look,
okay.
I've been 18 on the internet since I was like 12, all right?
Right.
That's how I got to look at like video games that were like more adult, things like that. But, when it comes to stuff like this, I think it's just, it feels more like a childish grab for attention than it does a company trying to improve its product, right? Because if you're trying to reach consumers, offer the best of the best, right? Don't say, hey man, you can make porn on this too. Well, that doesn't, what is that? That's not even, I don't get the business case there.
A story that will continue to give. Thank you, Dan.
For sure.
Appreciate it. Stick around, much more Ask for a Trend still to come. As earnings from a slew of retailers are set to release this week, these companies face new headwinds as war wages in Iran. Julie Hyman spoke to an analyst from Forrester Research about the risks facing the retail sector.
just putting earnings aside for a moment, how are you thinking about those gasoline prices and whether they are going to potentially cut into some of the discretionary spending that these retailers rely on?
Well, anytime you have higher gas prices, it's going to affect both supply and demand. It affects demand because the consumer is going to be pinched in their discretionary spend, as you said, because they are going to have to pay for gas to go to school and to work. And that means that there is just less left over. So you are going to see sectors like apparel, toys, sporting goods may suffer. You'll still see the essential goods continuing to be resilient. On the supply side, you are also going to see it has the same effect as a tariff, where basically your input costs are higher and your ability to transport goods from point A to point B, whether it's overseas to a domestic location or even within a domestic location, that becomes more challenging.
And Sucharita, I wonder too about the trade down effect, right? Like we've seen the Walmarts, the Costco's of the world, the dollar stores to some extent, already take some share because of the so-called K-shaped economy. Is there any left? Like, has the trade down effect already all happened, or is there still a little bit of room for that if we see that pressure from gas prices?
You will see trade downs happening at every level of the economy across different sectors. Even when you're looking at apparel, you will see people trading from a medium price retailer to a low price retailer. You'll even see higher end be kind of vulnerable to trade downs. You'll certainly see it even with commodities and consumer packaged goods. We will always see private label goods, as an example, generally pick up share at times like this. But it really is across the board. And the overall retail numbers, there were some numbers that the Census Bureau released last week, were surprisingly stronger than I had expected. They were still outpacing inflation, which means that people do have money to spend more. So anybody who is spending is absolutely going to be trading down, whether it's to private label or lower price goods, or just trading down the number of units that they purchase in anything.
So obviously we'll be watching that very closely. But to dig into a couple of the companies that are reporting this week, we got Kohl's reporting. You could argue it has bigger issues than what's going on with the gasoline prices in the United States. What do you think Kohl's has to deliver here when it reports?
So Kohl's has been challenged for a number of years. It has the misfortune of being in the department store sector, and in particular being in the lower end department store sector. Now, we just talked about trading down. We've been talking about the K-shaped economy. They have lower price point goods. They have a lot of entry price point goods. Theoretically, they should be well positioned to capture share. Their issue is that the consumer is more likely to go to stores like Walmart, even Target, certainly, kind of a hypermarket in regional areas like a Meijer. There are those issues that Kohl's has to grapple with. What we should be looking for is, are there comp store numbers? Is there any strength or health in those numbers? Is their customer retention level fairly decent? Really, what are the signs of strength that we are seeing? Because in general, the issues have often been related to the comp store sales, store closures, just that the Kohl's story is not necessarily a growth story, and they are losing share to lower end competitors.
I mean, we've got Dollar General reporting this week. We've got Dollar Tree next week. And it's interesting because those two haven't necessarily, like Walmart has consistently been doing well. The dollar stores, it's been a little bit choppier. Do you think that continues?
Well, I think that what's happened with the dollar channel is there have been some execution issues. There have been issues related to everything from their store growth strategy, some merchandising issues. Typically in a down economy, the dollar channel should do very, very well because that is the place that everyone trades down to. And they have actually picked up quite a bit in sectors like grocery in recent years. I think that, again, you have issues where you'll see Walmart picking up share, or even Amazon picking up share in some of those commodity spaces where the dollar channel should be winning. So we'll have to wait and see how the numbers actually turn if they kind of are stronger than expected, because what's happened is that the dollar channel more recently has done well, but when you look back over several years, it's been up and down.
Right. And then finally, quick question about Ulta, because that one remains such an interesting story to me, and I wonder if you think that is one where we are going to see potentially some strength. I mean, the stock, you can argue it's gone sideways or so over the last several months, but still has been kind of a monster.
Ulta has been one of the stronger stories in retail, and certainly in specialty retail, for some time. Beauty in general has been doing very, very well since the pandemic, and that hasn't kind of really changed. The consumer seems to be interested in this product. The consumer seems to be certainly allocating more share. This is one discretionary area that the consumer is leaning into. So I expect that Ulta will have strong numbers. They've had strong numbers for the last several quarters. Nothing seems to suggest that they won't be one of the winners, particularly if overall retail numbers have been strong. Ulta is definitely one that I expect to continue to do well, at least for the foreseeable future.
Sucharita, thanks very much. It'll be interesting to watch all those numbers this week. Appreciate it.
Stick around. Much more Ask for a Trend still to come. Time now for To Watch Tuesday, March 10th. Going to start off here on the earnings front. We're hearing from Chinese automaker NIO as well as defense tech company AeroVironment on Tuesday. But all eyes will be on Oracle third quarter earnings after the closing bell. Investors will be watching closely for updates on its massive AI infrastructure build-out, which has come into question recently. Bloomberg reporting the company and OpenAI are scrapping plans to expand a major AI data center in Texas. On earnings, analysts expecting Oracle could raise capital spending expectations significantly as it races to meet demand for AI workloads, with projections pointing to roughly $60 billion in capex over the next year. In the retail space, Kohl's announcing fourth quarter results on Tuesday. Analysts anticipating the company to miss sales expectations for Q4. The retailer is leaning on private labels and value promotions like the $10 and under fines, but early checks suggest shoppers are gravitating towards off-price competitors. And moving over to housing, we're getting existing home sales data for February. Economists forecasting a slight pullback there, with sales to dip to an annualized rate of 3.88 million. Another sign the housing market remains under pressure. And we're also going to be watching the NFIB Small Business Optimism Index. Economists expecting that reading to tick slightly higher to 99.5 in February, giving investors another look at how smaller businesses are feeling about the state of the U.S. economy. That's a wrap on today's show. Thanks for watching.